Investing can be a great way to grow your wealth over time, but it can also be risky. Here are some tips to help you make informed investment decisions. Set clear financial goals. Before you start investing, it's important to have a clear idea of what you want to achieve. Are you saving for retirement? Is a down payment on a house? A child's education? Knowing your goals will help you choose investments that are compatible with them. Diversify your portfolio. Diversification is the key to reducing risk in your investment portfolio. Spread your money across different asset classes such as stocks, bonds, and real estate. You can also diversify within asset classes by investing in various companies and sectors. Do your research. It's important that you do your due diligence before investing in any company or fund. Look at the company's financial statements, management team, and industry trends. Understand the risks and potential rewards involved. Be prepared to wait. Investing is a long-term game. Don't get caught up in short-term market fluctuations. Instead, focus on the long-term potential of your investments. Have a plan to manage risk. Investing always involves some risk. It is important to have a plan to manage this risk, such as setting stop-loss orders or regularly reviewing your portfolio. Consider working with a financial advisor. A financial advisor can provide valuable guidance and can help you develop a personalized investment strategy. Pay attention to fees and expenses. Investment fees and expenses can eat into your returns over time. Make sure you understand the fees associated with any investment you are considering and try to minimize them as much as possible. Make a plan to manage your emotions. Investing can be emotionally challenging, especially when markets are volatile. It is important to have a plan to manage your emotions and avoid impulsive decisions. This may include setting rules for yourself or working with a financial advisor to help you stay on track. Stay informed. Stay informed about the economy, the markets, and the specific industries in which you invest. This will help you make better investment decisions and react faster to changes in the Sunday. Stay disciplined. Investing requires discipline. Stick to your investment plan and don't let emotions guide your decisions. And remember, a long-term perspective is the key to successful investing. Remember, investing is a process, not an event. It takes time, patience, and discipline to see real returns. It is also important to note that past performance is not a guarantee of future results, and it is important to understand the risk and potential rewards of any investment. Remember, investing is not a quick plan to get rich. It takes time, patience, and discipline to see real returns. The main thing is to start early and stick to a plan. Yes friends, our video was so much. Don't forget to subscribe and like for more such videos. Have a nice day everyone.